Hi, my name is Alex Carlucci with GustanCho.com. I'm here to tell you what you guys Google a lot. You guys Google, how much will my mortgage be? Well, that's a loaded question. So how much your mortgage will be will depend on how much you want to buy, how good your credit is, how good your rate's going to be, what the property taxes are, what kind of insurance you're going to need to get in the area you're going to get, and the PMI factor we have to use against you, and if there's any HOA dues. So how much your mortgage is it going to be is a very hard question to answer. And a lot of you guys like me to pre-approve you for a certain loan amount when it's not a loan amount, because you may qualify for a $300,000 mortgage with taxes being $5,000 a year, but you're not going to qualify for a $300,000 house with $8,000 taxes. So I can't just write you a blanket pre-approval based on a purchase price. It has to have the taxes and insurance built into it. So it's more the payment as how much your mortgage is going to be and how much you're going to qualify for. So I tell people there's ways to cheat, ways to figure out your mortgage on a mortgage calculator on Google. There's tons of them out there. Just make sure it's all inclusive. Make sure it's got the principal and interest. It's got the PMI. It's got the property taxes, it's got your hazard insurance if it burns down, and it's got HOA fees if any. So the principal and interest is calculated based on the loan amount and your interest rate. If you're qualifying yourself and want to know how much your mortgage would be and you're on Google and yourself, I would Google today's rates and I would add a half a point to it, because you're probably not going to get those rates, because those rates that they advertise on Google are very low, and it's usually for 20% down, 800 credit score, single family home properties, and it's not an accurate rate. So I would add a half a point to the rate that you find on the going rate to use a rate. So you put in your purchase price, your down payment amount, and then you put that rate in. It's going to calculate principal and interest. Then it's also going to calculate your PMI. PMI is private mortgage insurance. If you put down less than 20%, it's required on all loans, unless you choose a conventional LPMI program. I'm not going to go into that right now, but just use the PMI factor that it gives you for your down payment. So now you get the principal and interest, now you get the PMI. Now insurance, I use about $1,000. Now if you're in Florida and you're in a hurricane zone, it's going to be $3,000. If you're in the middle of Iowa and nothing ever happens there, and it might be $600 a year. I use $1,000 for pre-qualifications, and then when it comes, if I'm really pressing up tight ratios, I make sure the borrower calls an insurance agent before I really send them out on the street. But for your seeing how much your mortgage would be, just use $1,000 for now. It's a safe number. That's going to ask what the property taxes are. Not a lot of you will know what your taxes are. I use Zillow, and so I look at houses in my area that I'm interested in, and I start getting a range of what taxes are. So if you start seeing taxes $3,000 to $5,000, why don't you put $4,000 in there for your purposes? You put $4,000, it'll divide it by 12, it'll give you a monthly taxes. So now you get your principal interest in monthly terms, you got your PMI in monthly terms, you got your insurance in monthly terms, and now you get your taxes in monthly terms. Now if there's an HOA, which single families do have HOAs, it's not common, but all condominiums have HOAs, and some townhomes, and most townhomes do too. So if there's an HOA, make sure you get that in there too. Add those up, and that's going to be your mortgage payment. So that's how you determine how much your mortgage payment is going to be. If you want a more accurate description of how to do this, go to GustanCho.com. We have tons of blogs on this, or just call me at 630-915-7550.